It is the most anticipated time of the quarter, everybody. Yes, it is more anticipating than that of bank earnings. It is more anticipated than that of big tech. We got, what else do we got? Consumer discretion. We got more anticipated than that of Jerome Powell, CPI, FOMC. It is none other than NVIDIA Day. So this is going to be insane. Now, unfortunately, Mike is not with me right this second. Yes, I know. However, he is just running a little bit late. So when he is ready, he will call me. All right. So that's not really an issue. So he will be here for the stream. He'll just join us a little bit later. But we got big news, guys, because, well, NVIDIA NVIDIA, I would actually consider it, runs the world at this point, right? At this point, NVIDIA is the number one company in the world. In fact, NVIDIA for the past couple days, it reached such an all-time high that it surpassed even the top, 4 companies by market cap, which is insane to think about, right? Absolutely insane to think about. I believe it passed Amazon, and I believe it also passed Google too, which, again, kind of crazy that all of this just comes about because of, AI. This is that. There's nothing else. So they did have earnings today, obviously. And man, do we have a lot of news. Do we really have a lot of news? But of course, guys, we're going to talk about all of that today. Make sure to like, subscribe, comment. It really does help here on Rumble. Of course, we are still doing the Rumble exclusive stream. So it's going really well. And let's try and make this stream a good one, guys. Let's try and make this stream a good one. This is something that we have been anticipating for a while now. So yeah, again, for all those of you who probably are just joining right now, Mike, unfortunately, he is running a little bit late, but he will join. So there you guys have it, right? There you guys have it. Of course, before we start, I always have to do this, guys, and this is something I'm going to do from now on for all my live streams, even after we go back to YouTube, because, well, as you guys know, I am Christian, and I can't ignore my Lord Christ Jesus when he has blessed me so much with everything, all of this, right? I have to thank him. So let's do a quick prayer really quickly because I really want to thank my Lord Jesus Christ. So, Father, my Lord Christ Jesus, thank you so much for everything that you have given me, Mike, and giving us the ability to spread not only your word, right? Because we do implement some Christians' values in our stream, but also just advise people when it comes to, I wouldn't even say advice, but more of just warn people of the possibilities that may happen in the future, especially when it comes to the economy. So please, Lord, guide us to, if things do end up turning for the worst, a lot of people may see that as a bad thing, but you're causing it. Therefore, as Christians, we got to see that as a positive thing, because in reality, nothing you do is bad. Everything you do is good. And, well, if I'm asking for an opportunity to be wealthy, the Lord will give me, right, an opportunity to be wealthy. However, that may come in several different ways. So I trust in you, Father. I trust in you, my Lord Christ Jesus, and please guide us in understanding this wild and crazy time. In Jesus' name I pray. Amen. All right, guys. So let's get started with this. Because there's actually one news that I really do want to cover before we go on to NVIDIA. It's going to be really quickly, and I really wish Mike was here. Unfortunately, I really do wish Mike was here. Honestly, at this point, I'm about to call him and tell him, just join while you're eating. I really don't care, right? But the news that I mainly want to cover with you guys is the fact that it is 1929. Oh, wait a minute. I always forget to do this. Let's see. It is 1929. Deja vu all over again. Again, this is coming off the back of what we just covered yesterday. And the fact that it's looking real similar to that of something bad real happening, right? I mean, yesterday we covered the fact that you got Congressman, what was his name? Tuberville, whatever. Some kind of... He's, I'm guessing he's the one that makes the plastic thing like Tupperville or whatever. I know that's a bad joke. But he just sold off all of his stock, right? Why did he sell off all of his stock? That's a really important point. Now, granted, in that video, he said, sorry about that. He said that, he's buying put options, but we saw the put options and the contract expired back in January of 19. So unless that contract was rolled, which we have no idea if it was rolled, I don't really see what the point in mentioning that he bought a put contract that already expired, right? But the fact that he is selling out all his stock tells us that, something may actually happen, right? And now we're getting this. Is it 1929? Deja vu all over again. The reason why 1929 is an important point is because this was the year before. Actually, I think the Great Depression did start in 1929. It just hit peak in 1930. Because the Great Depression did occur, guys, in 1930, where it was the worst thing ever imaginable. People think that 2007, 2008 was bad. To be fair, I wasn't born in 1939, right? And many of you that lived through 2007, 2008 probably weren't born either in 1939. But the point is that, we are, how can I say this? If you went through, if you look back to 1939, it was a billion times worse than what we ever went through when it came to 2007, 2008, .com, COVID, and any other mini recession in between. So the fact that this dude, John Wolfenbarger, saying that this is looking like 1929 again, it's a little bit scary. So the topic of this right here, we got stock market and economic conditions are similar to those seen in 1929 stock market peak. Oh boy. Oh boy. That is not good. That is really not good. Valuation metrics show that the S&P 500 will likely be at least 40% lower in a decade. All right. Well, that's great news. That's great news. Absolutely, that's great news, especially for somebody like me that wants to buy cheap companies. Leading economic indicators and market concentrations in large stocks resemble those in before the Great Depression. That is true, guys. I mean, we got something called the Magnificent Seven, which is literally 7 companies carrying the entire stock market, right? Amazon, Apple, Microsoft, Google, Facebook, and well, the one for today, I believe it's the one for today, NVidia. So I know there's like 2 more in there, but still, yeah, it's mainly the big mega cap companies in the trillions of dollars or close to $1 trillion market cap that are bringing this thing up, which is not an indication of a healthy stock market, right? Or an indication of a healthy economy, right? So that's very, very interesting to see. Let's actually read this a little bit. So if the late Yogi Berra was able to look at the charts I will detail in this article, I believe he would likely say it's deja vu all over again, since current stock market and economic conditions are eerily similar to those seen in 1929 stock market peak. While we have progressed from Louis Armstrong and radio to Taylor Swift and AI over the past century, human psychology over the laws of economics have not changed. That's 100% true. Cynics always say, I'm just trying to get attention by comparing current conditions to 1929. My response: 1, yes, I like when people read my articles. All right. Again, this is an opinion statement. I understand that, but it does have some truth to it. I like when people read my articles. And 2, as you'll soon see, I believe that there are some very important similarities between now and 1929 that informed investors should be aware of and factor in to their thinking. 4 steps to bull and bear profits. I monitor hundreds of different fundamentals and technical indicators. See, this is why I like to do the fundamentals and Mike does the technicals, because you can't have one without the other. I mean, you can have fundamentals without technicals, but you can't have technicals without fundamentals. I'm sorry, Mike, but I'm going to call you out on that one. To identify and profit from bull and bear market cycles, I categorize each of these indicators into 4 different areas, which I call the 4 steps to bull and bear profits. These 4 steps are valuation metrics for estimated long-term returns of stock. Oh my goodness, look at that. Look at that. Valuation metrics for estimating long-term returns of stocks in other major asset classes. It's almost sounding like a discounted free cash flow. It's almost like what I've been constantly saying every single time we take a look at companies. Hey, every company we analyze, well, no, not every. Most of the companies that we analyze are overvalued. Every single one of them. Well, not every single one of them. Again, I'm being hyperbolic here. But most of them are, right? Most of them are. And that's the first point right there. Leading economic indicators for determining the outlook of the boom and bust business cycle. Leading sentiment and technical indicators to identify potential changes in bull and bear market trends. That's more of Mike's thing. And technical trends indicators to determine current bull and bear market trends. Here are some key indicators from each of these. All right, so then he just goes further into it. But the point is, guys, is that, yeah, this is looking very, very eerie to, the 1929, right? And if things continue to go the way that they are, we might, I don't know if we're going to get it this year, right? I love the fact that at the beginning of the year, at the beginning of 2024, everybody on Twitter, oh my goodness, everybody on Twitter was posting their W's, was posting the W's of being a bull, saying, see all those bears? Yeah, where's your recession now, idiots? The market only goes up. I'm not a bear or a bull. Straight up, I'm not. All I'm doing is I'm looking at basic, and I mean basic, I mean real basic, very basic economic trends that you show any high schooler, they'll be able to tell you, yeah, something's off with that, right? Something's absolutely off with that. And all these people were posting their W's when I'm thinking here, and I'm just like, okay, well, are we going to get a stock market crash, right? Are we? Because at this point of the game, the stock market is no longer about valuation, and that's my worry. Again, I know I'm sounding like it's different this time kind of thing, but it does feel like it, right? Because we're getting to the point that company earnings don't really matter. Yes, they move, right? Yes, they move when they do have earnings, like we're about to see in NVidia today. They beat on earnings and they're up a decent amount. But what really moves the market is now. Is the Fed going to cut rates, or is the Fed going to increase rates or keep them the same? What is the likelihood of an interest rate cut? That's what the market has become. At the end of the day, that's literally what the market has become. And that cannot be sustainable. That cannot be sustainable because now you're no longer going off of, economic data. You're literally going off of some dude sitting in a room with like 10 people in front of him saying, what do y'all want to do? Do we want to cut or do we want to raise? Yeah. I think, you know what? I think we've caused enough unemployment. I think we caused people enough jobs. Yeah, unemployment's upwards of like what? And I'm not saying that this is the case now. All I'm saying is, yeah, let's bring unemployment up to like, I don't know, 8%. Let's make people suffer and say that we're lowering inflation because of it instead of actually, incentivizing people. And I know that that's not them. But instead of incentivizing people to make more stuff, let's just take away people's livelihoods. That's it. Let's just take away people's livelihoods, and that's the solution. The market's running off of that instead of, hey, how is business going? How in reality is supposed to be like. So just wanted to pull this out, guys, because this is absolutely crazy. By the way, shout out to the 30 of you guys watching right now. HC says hi, Robin Hood says hello everyone, and Dr. V says hi. Thank you guys so much. So again, you guys can talk to me in the chat. Mike isn't here just yet. Hopefully he messages me when he's about to call me, but he'll be here. Don't worry about it. At least I hope he's here. I'll be really mad if he's not. Let's see. I messaged him and he says K. Basically, I texted him saying I'll start it and you can call in afterwards. And then he said K, so okay. There you guys have it. If he's not, Mike, is that you? Are you Mike? I did not write that. Guys, that was not me. That fatal nexus right there, that is not me. That's Mike texting right there. Finish up so that way you can call, so that way you can call me. Mike, goodness gracious. So, guys, that's just mainly what I wanted to talk about right here. Is this going to happen? Are we going to get it this year? I don't know. We've been calling a downturn since 2020. We kind of got that in 2022, but nothing really happened. So I don't know. Now a lot of people are probably saying, "Oh, they're just waiting for the election because if Trump gets elected, yeah, we are absolutely going to going to crash this." Look at Discord, you pleb. Okay, well, hang on a minute. Don't talk. I said don't talk, and what does he do? Talk. Hang on a minute. Hang on, because I have you through the TV. I gotta put you through the headphones. Hang on. Okay, wait. That's the input. Okay, that one, and then this one. All right, talk.
All
right. Okay, good. So, there he is, everybody. Mike is here. So, how are you?
I literally joined the stream right as you're saying, I hope Mike joins. I'd be pissed off if he doesn't join. And I'm just like, that's ironic that I literally do ... to get your attention.
I just love it because I look at him and just like, I did not write that. I did not write that. So how much of this did you get? Or do you want me to just give you the TLDR?
Give me the too long didn't read version.
Okay. TLDR is there's this dude saying that we're looking very, very close to the current economic environment is looking very, very close to that of 1929. So there you go. I'm sharing my screen with you just so that way you can see too.
It's like I almost want to say thank you, Captain Obvious.
Well, a lot of people aren't seeing it. That's kind of my point. You know, a lot of people really aren't seeing it. I was just saying that at the end of 2023, beginning of 2024, how many people were posting their W's on Twitter, being like, the market didn't crash. Pfft. What are you talking about, you stupid bear? You get me?
Yeah, and the thing is, like, they're gonna be saying that tomorrow too, because NVIDIA earnings, and it's probably gonna skyrocket the market, even though the Fed minutes came out today and like it really didn't do much. Like they were down on Fed
Right.
minutes, but again, the second NVIDIA earnings came out, it was like
Yeah.
party like it's 1989.
Or 1929, right?
Yep.
So yeah, that's pretty much the TLDR. And now I was just about to go into the actual news, in that Nasdaq ends well off session low. S&P and Dow stage reversal ahead of NVIDIA results. So this was just when the market ended at 4:09 p.m. today. So again, let me actually take a look at how things ended, because I'm not fully sure how they ended. Let's see. US. So Nasdaq fell around 0.32, S&P essentially flat, as well as Dow.
And then that's the closing price at 4 o'clock.
Right,
If
that's
you
the
look at
right.
futures, it's a very different story.
Yes, I am aware. I'm looking at futures right now. Nasdaq is up 1.14%. I'm fully aware. But this was mainly because of the obvious one, right? The obvious one.
Yeah.
Let's see. We got AC saying LOL and AC saying Discord. Well, we call each other on Discord essentially. And we got Jay McKay. I think it's the first time I've ever seen you here. Let's see. Easy money creation caused the depression. Sound familiar? I agree with that. Yep, I agree with that. Sound familiar? Today, the 7 monopolies must be broken up. I don't agree with that. Actually, I would agree that one monopoly needs to be broken up. It starts with the Fed and ends with Reserve. So that's the one main monopoly that needs to be like completely like destroyed. It really does. That's the one monopoly. The reason why we're in this current situation is because of them. Not because of Microsoft, not because of Apple, not because of Google. It's them. It's literally them. Manufacturing must be brought back. I agree with that. Yep, 100%. People have to be incentivized to create more. Like I was just saying, why is the Fed? Well, I know why they are, but the only tool that the Fed has in their disposal to lowering inflation is destroying people's livelihood instead of enticing people. Hey, make more stuff.
No, we can't have that.
The actual.
We can't have upward mobility.
Exactly. Like the actual economics that works, the Austrian version of economics, not the Keynesian, because Keynesianism is ridiculous. It doesn't make any sense. Goodness gracious. Manufacturing must be brought back to the United States. Fully agree. The government must be downsized. Most of the what?
Most of it.
I think this was most of it. Yeah, no, I fully agree. I agree. Jay McKay, I fully agree with most of that, except for the 7 monopolies must be broken up. There is no such thing as a monopoly. The one true monopoly that ever exists is the government. Let's just keep it 1,000. Which the Fed,
of making a monopoly, by a politician.
Right. The first step of making a monopoly is getting the government on your side. When you have true competition, it's not, there is no such thing as a monopoly ever. Period. Monopolies are only created through the state. That's it. End of story. And then Robin Hood says, "And the Fed." Fully agree with that one, buddy. Fully agree with that one. All right, so let's take a look at this. U.S. stocks on Wednesday stay. Oh, by the way, guys, shout out to the 35 of you watching. Wow. Okay, that is almost.
Are we
a
going
record.
to cover Fed minutes?
Oh, I did not realize that the Fed minutes were out today.
We can do, because there was we can look into it. Like on Financial Juice, you can take a look at it and basically just like glance over a couple of the stuff, because nothing really notable.
And that's what I figured. Well, I mean, it was notable enough to the point that they crashed, right?
Yeah. Okay, hold on. Market makers were having a freaking doozy of a day with NVIDIA. They were like, we're going to sell these shares so that all the plebs are buying in, and we're gonna buy the bottom. I'm like, when I saw that run in the last 15 minutes, I was like, yeah, they're gonna run it up.
Yeah. Yeah, hey, before we move on any further, do you want to tell what you did, or do you want to say that for when we get to actual like talk about NVIDIA?
Let's save it for NVIDIA.
Oh,
Let's save it for
NVIDIA. Okay, okay. It says I'm right now submitting the thing for the for Rumble for the Rumble thing. So,
but I'm looking through Fed minutes.
Okay.
So you had Bowman talking. That I love how right before Fed minutes, Bowman says the time for lowering rates is certainly not now.
Oh,
Dum, dum,
oh,
dum.
yeah, and that's exactly what I was talking about. Like the market has become, what's the Fed doing? Are we cutting rates or are we not? That's it.
What's the number one thing politicians do when they say like they're worried about something, right? They talk about it. The housing market isn't influencing the Fed's rate cut decision. I'm like, thank you for pointing out to where everything's going to start. A couple of policymakers pointed to downside risk from maintaining an overall restrictive stance for too long. Okay, you've been rambling about that till we're all blue in the face.
Yeah, it's not like housing prices are up 6% over the past year, right? Right. It's not like renting prices are up also by the same rate as housing prices, right? It's not any of that, right? It's not any of that. It's not the fact that, at least as of right now, I don't know about you, but gas has increased.
Yes, I saw that one when we talked about it, and then I went to go fill up after I said I had been on a trip, and then the subsequent weekend we filled up. Yeah, I saw that one.
Yeah,
that was sticker shock.
Yeah, here we're back up to 350. Whew. Oh dear Lord. Oh dear Lord. So,
but I love this latest comment from Fed minutes. Some officials noted progress on inflation could stall.
Hang on. Do you want me to pull you up?
Let me see if it would configure right, because I don't have it set like how we share.
Okay. Well, it's okay. So I just want to get through this one article, and then we could actually get into everything else, because after this, I want to go talk about NVIDIA, because obviously they're going to talk about NVIDIA on this article, because today, even though we had a ton of earnings, it's all about NVIDIA. Let's face it. So let's take a look at this. U.S. stocks on Wednesday staged a comeback in the final hour of trading, bouncing well off their session lows to end mixed. Still, sentiment was largely muted after a weak bond auction and the latest Federal Reserve minutes, which showed that the central bank was in no hurry to cut interest rates. Drop the mic. Drop the mic right there, baby. Has the CME tool been changed yet or no?
Of course not. They're still pricing in June cuts.
They're still pricing in June cuts. Oh man, I really do hope my prediction comes true. I really do hope my prediction comes true.
Now May has the same chance. They haven't really changed. They actually gone up in current, but it's like 5% tick up from like 65 to 70.
Yeah,
and that's not anything notable.
No.
However, they are still pricing in a 70% chance cuts in June.
Yeah, I really do hope my prediction comes true.
My one comment about them saying some officials saw inflation could stall. Hey guys, insert F word here. You dumb, you know what? It damn stalled already.
No, dude, say that one more time. Some officials say that inflation could stall.
They here, let me see. I'm gonna find the exact words.
Okay, because what I was about to say is, isn't that exactly what I just said a couple days ago?
Yeah, some officials noted progress on inflation could stall. Could?
It already is.
Are you kidding me?
Yeah, it already is.
It's been.
Well, I mean, dude, like my whole thing, we'll see what happens in June, but watch. I think my prediction will come true. We're going to get stagnant inflation for a little bit, and then we're going to start seeing slowly ticks upwards, and then that's when the Fed's going to be like, and that could be by the end of the year where we start seeing like the trend going back up if they don't increase interest rates again. So, yeah. Coming back over here, though, let's see. Traders are eagerly awaiting NVIDIA. This is what I'm saying, man. The fact that one company is doing this much chaos is insane to me. Wow. Traders are eagerly awaiting NVIDIA quarterly results after the closing bell. Expectations surrounding the chip giant have reached stratospheric highs.
Yes.
No, I think we're no. I
accurate.
think we're beyond that. I think we are beyond that. We were as stratospheric highs 2 quarters ago. This is not no. Right now we're like halfway to Mars at this point. Especially in light of the artificial intelligence fueled rally in the company's stock that has also contributed massively to Wall Street's overall bull run. Yeah. So there you guys have it. We also had this company, Palo Alto, PNW, is actually slumping. They fell today a decent amount. And you can see over here, weighed on the index with the stock slumping to its worst day on record after the cybersecurity company cut its annual revenue and billings guidance on accounts of softness in the industry. Huh. Okay. Other cybersecurity names and exchange trades funds declined as well. Hey, that's actually maybe a decent time to take a look at cybersecurity companies, right? You know,
Yep.
just like how NEE took down the entire utility sector when they reported bad earnings. Hey, if there's a good cybersecurity company that you guys might get into or might like to get into, you just thought it was expensive. Well, maybe now might be a good time to buy it since it's fallen. So yeah.
Yep.
All right. So Mike,
Yes.
you have anything to say or no?
Even Standard & Poor's is coming out now saying that they're going to cut rates in June.
I really
The
hope-
rating agency is coming out and making comments about Fed policy.
Is this from Financial Juice?
Yeah.
Okay, hang on a minute. Is this like recent or did you have to scroll down a lot?
3 hours ago.
Oh, okay. Well, that's a little bit ago, my dude. Hang on a minute. That's
scroll
2
down
hours
once you go
ago.
scroll through all the
3
bull
hours
crap
ago.
on the
Let's see. Standard and Poor's. We got NVidia. I'm looking back at. Let's see. That's 4 hours ago.
Right below the NVIDIA data center sales to China declined significantly.
Don't really see it. Maybe you could point it out for me.
Yeah, go up. Up. There.
Where?
Right there.
Right here? S&P
Go up.
on US, we have not changed our 2024 outlook for monetary policy. That
Go
one?
up one.
Oh.
Federal Reserve will cut its policy rate by 25 basis points as its June meeting, with cuts totaling 75 basis points by year end.
I really do hope I'm proven right, dude. I would. Let me tell you, if my prediction actually comes true, either by June or, I mean, to be fair, hang on a minute. Let me backtrack some here. We were saying that we were probably going to get a decent pullback at around May or June, right?
Yeah.
Remember how we were saying that in like?
It's also seasonality. Seasonality plays into it as well.
That's fair. That's fair. Yeah. But I remember strictly saying that, and this was back in like October or November, that we're probably going to see a downturn in the markets as of, and I don't remember why. At least I don't remember the second reason why. One of the reasons was we
said student loans.
Yeah,
we definitely said student loans, but now because they keep extending it, it's like,
well,
there's like a multitude of factors, right?
Yeah. Well, have they extended it? Have they extended it more though?
They kind of, right? So like you don't get the late payments. So you still have to make payments, all your payments by the end of the year, but you can make them in a lump sum at the end of the year. So everyone's going to just do that and then get all the interest charged on them and then all the late payments then. But you won't see the damage.
But yeah, yes you do. Yeah, but what? If you lump sum everything at the end of the year, you're still getting the damage. Just you're delaying it. That's the only difference.
I'm saying you won't see it until Q1 of the preceding 2025.
Wrong, Q2, because we'll get Q1 data in Q2.
Yeah.
So wow. So what? April, May, June of 2025? Oh my!
I don't think that'll be the trigger. I think that banks will be the one.
You think banks will be the one?
NYCB has something to say.
That's fair.
It's heading to a new low. So
that's a fair statement. Let's take a look over here.
And I'll be right back as you recover that.
Oh my goodness, Mike. Let's see. Apple's going up again. Yeah. I'm not aware of Apple going up. But I mean, we could take a look at real quick. Wow, bro, the Nasdaq right now is absolutely ripping everybody's face off. Oh my goodness. Let's see, Apple. I mean, it's back up to 182. I wouldn't say it's back up, but it is a little bit up of what it was before, right? 182. So, yeah. Again, this is one that Warren Buffett did trim as of recently, which is very interesting. But guys, the big news of the day. NVIDIA gains as Q4 results guidance beat expectations. Mike was right. Mike actually got it right. If y'all don't remember, I wish he was here. He's always being a pleb like this. He was saying that he thinks that they'll do around 22 billion when it comes to revenue, and they did just that. They literally did just that. I don't know if they mentioned it here, but I do have the other one pulled up. Let's see. I do have. Let's see. Not that. Oh, why do I have that one pulled up twice? No. I do have it pulled up when it comes to like the non-GAAP EPS thing, so we'll cover that there. But NVIDIA shares jumped 6.4% in extended hours trading on Wednesday after the semiconductor giant reported quarterly results and guidance that top Wall Street's expectations. Looking at the first quarter of 2025, which technically, yeah, they're a year ahead already. NVIDIA expects to generate $24 billion. That's the next one, isn't it? Oh my goodness, that's the next one, isn't it? Oh, wow, that is crazy. So we just went from what, 20? Oh man, we just went from 22 billion to now 24 billion. Okay. Plus or minus 2%. Analysts were forecasting 21.9 billion on revenue for the Jensen Huang-led company. Adjusted gross margin is forecasted to be around 77%, plus or minus 50 basis, while adjusted operating expenses are expected to be around 2.5 billion. Quote, accelerated computing and generative AI hit the tipping point, Huang said in a statement. Demand is surging worldwide across companies, industries, and nations. It hurts. It hurts, guys. It hurts. Here's the thing, right? I'm gonna just make this clear. Shout out to the 33 of you guys watching right now. Wow, absolutely crazy. Absolutely crazy, guys. Thank you so much. We got Rumble partnership, and we're the only ones covering, economic news and earnings. I don't know of anybody else. So we're here to bring Rumble a little bit more content, right? Can't just be politics and gaming. Well, it is fun to watch Trump, I guess. It is fun to watch Trump and his antics with saying like huge and bigly. You gotta have some other content for you guys to watch. So just to make this clear, I'm not against NVIDIA. I really am not. I'm against NVIDIA's valuation, right? That's what I'm against. Because it's getting to the point that, well, let's actually take a look at it in just a little bit. It's getting to the point that this company is overtaking companies that have been...
everyone?
Well, yeah, I mean, as of a few days ago, NVIDIA took over that of Google. And I'm looking at this news, which we are going to take a look at it. I'm looking at this news and I'm just like, how is NVIDIA bigger than Google? Whatever your opinion might be of Google, how is NVIDIA bigger than Google? Google is the search engine. It became a verb for a reason, right? So how is NVIDIA?
Because it's the chip company. It's like it's becoming the AI company, essentially.
It is becoming the AI company. It honestly is. It honestly is. Oh, dear Lord. For the fourth quarter, NVIDIA earned an adjusted EPS of $5.16 per share. And Mike, look, you were right.
I think it was 24.
No.
When I saw NVIDIA when it came out, they were reporting 24 billion in earnings, in revenue.
Mike.
Let me see what it...
Mike, who's the fundamentals guy here?
You. I'm just saying what I saw on the dang chat.
Well, I'm gonna show you exactly why you are wrong. Now watch. If I'm proven wrong, I'm gonna be really pissed off. Mike.
Yeah.
What does it say right there?
Yeah. Okay. That's fine.
They're expecting 24 for 2025.
Oh, okay.
Yeah. For the next quarter, they're expecting 24 billion.
Hey, I'll take being right. I'll take being right. I don't
You're
mind.
semi-right. You're not right, but you're.
Yeah, no. I called 22. I'm gonna.
Okay. In that sense, yes. In that sense, you're 100% right. But the 24 that you were referring to was this one. Where am I? Right there. NVIDIA expects to generate 24 billion in revenue in the next quarter, in the first quarter of 2025, which is next quarter for them because they're a year ahead essentially.
Gotcha.
So yeah, no, they did do 22. So you were right. You were absolutely right. So what do you think they're going to be making in the first quarter of 2025 for their 2025?
25.1.
I love how the
I think they'll
margin
beat
just
it
keeps
by
shrinking.
1.5.
What?
I think they'll beat it by 1.5. They'll keep beating it. It's just the number of
The
how much they
margin.
beat it by is
The
going to shrink.
margin. Yeah, the margin is going to keep getting smaller and smaller and smaller.
You
Oh
can't
my
like
goodness.
as much as like because even they said like there's negative headwinds from like the whole China thing.
Yep.
And like that's still, or I'll say this. 25.1 if the US continues on its pathway of restricting the chips. If they allow the chips to be shipped to China in the way that like NVIDIA is pushing for, easily 28, 30. Easily. Like you're looking at like that market is massive.
Right. But you know,
And-
but you want to know something? And I just thought of this. Mike?
Yes.
Okay, I just thought of this. What happens if Trump gets into office and the China tariffs start to happen again?
I'm gonna go by Intel.
Pretty much. A lot of people.
That's gonna be my response. It's gonna.
Yeah, go on.
It's gonna be well, if not getting into politics and not saying, but if you look at the
you really can't separate economics from politics at this point.
If you look at the I'm a data person, right? If you look at the swing state aggregated polling, it was never like it is now. Like you're talking like Ronald Reagan re-election levels.
Not saying that that's guaranteed, but
yeah, it's something different, right? If you look at the data and you look at the candidates, you see one candidate that was more ahead in the aggregated polling going into the 2016 and 2020
yep,
elections respectively.
yep. So
Meaning swing states are the keys.
yeah,
Or in the Keys to the White House book.
Right.
Read it. It's an amazing book. But long story short, that's not to say that you don't plunge us into depression prior to that, because I don't know about you, but there's a debt ceiling negotiation in March.
that's true. Is there a debt ceiling negotiation?
We don't even have to get to June. We can just stay in March. We got the Fed facility expiring, debt ceiling negotiation. You have, or not debt ceiling, sorry, government funding negotiations. Which, what would happen if we get another ousting of the speaker? That'd be interesting.
Yeah, I don't know. That would be very, very interesting. And again, also in March we have on March 11th. What do we have? The thing ending. So
Yeah, the bank term funding program.
So March is
HC
going to be
says,
nuts.
Trump will not win. They won't let him.
Well, we're not going to get into that because that is mainly politics, right?
Yeah, we'll see.
But
we'll let the market, or we'll let the politics unfold, and then we'll go from there. I'm not gonna go one way or another. It's just
what I say to that is it's in God's hands, right? It's in God's hands. That's it.
But going back to the trade war thing, that'd be very interesting.
It would be.
Because it's like NVIDIA, you can't get any of your chips out of there. It's like, well, crap.
And that's what a lot of people, and that's what I even talked to a couple of my coworkers. They were saying that, you know, during Trump the market was up, and I'm just had to remind them. I'm like, no, it wasn't. Are you kidding me, dude?
Do you have like all short-term memory disorder or something?
I'm like I'm like the economy was good, but the stock market was completely collapsing, especially when he was doing the whole China tariff war stuff, right? That was a big thing. Yeah,
I
remember we were in college.
Down 10%. Up 5%, down 10%.
I remember we were in college. I think we were like in chem lab or something. And I looked at back then. We have Robinhood, and I look at it and I'm just like, everything is down right now. So imagine something along that scale today with NVIDIA and the whole chip thing. Oh, forget about it. This is insane, right? This is insane. A company like Intel could. Again, I'm not making a prediction. All I'm saying is, if things continue going the way that they're going, if Trump does get elected and tariffs do start happening again, Intel will become easily $200 at that point, because they're the only ones that have a plant here, aside from Samsung. I think Samsung was making a plant here in like Texas or something. But you get my point though. Regardless, let's come back over here. So they did do a revenue of $22.1 billion, as gaming revenue surged 50. Gaming out of everything, Gaming revenue surged 56%. What's coming out? Is there a new console coming out or something?
No, it's just all the games are using AI now. They're using it to do ray tracing, and essentially it's a growing market. It's
Yeah.
your new engines are coming out. They're requiring these chips.
Oh, dude, the Unreal Engine was amazing. I think the new Unreal Engine looks so realistic that it looks like real life. Have you ever seen that?
No, but I've heard about like some of the like the computer generated graphics, how they're like they're starting to get really really good.
Well, maybe at the end of the stream, I could play everybody that video. It's insane. It's absolutely. You look at it and you're like, that's the dude's walking through the street, and the dude has to pause and like go in spectator mode to show people there's actually a video game. It's insane. So yeah, gaming 56% year over year to come in at 2.9 billion over the 2.72 billion estimate. Wow. Data center revenue flew past expectations, coming in at 18.4 billion compared to the estimates of 17.21 billion. Data centers right now is the big thing, man. Data center, it is the big thing right now. Automotive revenue. Where am I? No, I skipped one. Didn't I? No, I didn't. Automotive revenue for the period clocked in at 281 million, while professional visualization revenue rose 105% year over year to 463 million. Today, total revenue for the period rose 265% year over year. I can't wait to take a look at the 10-year graph when it comes to this.
Skyrocket ship up.
Bro.
It's going to look exactly like its chart.
Bro, it's yeah. You mean like Cisco's chart, right? Cisco's chart back in 2000, right?
No comment.
No. Okay. Adjusted gross margin came in at 76.7, above the 75.4 estimate. The company said data center sales to China declined significantly during the. Hang on a minute. This kind of contradicts what you just said, though.
Well, they curbed, but it doesn't need. Remember, they also get direct material flow from that country.
All I'm saying is the company said data center sales to China declined significantly during the period amid the Biden administration's export curb controls. Does that mean that all of it was, or majority of it was? No,
it's just chips. They're preventing companies from selling chips to China.
Right. Oh, Biden is.
Yes, but it's because well. Yeah, but they can sell them to any other country, and then the country turns around and sells them to China.
Oh, okay, great. So,
no, they're not banning them. They're just like, well,
they're relocating it. They're relocating it, basically.
Yeah, like, but if you sell to Mexico and Mexico sells it to China, well, we don't know what Mexico's doing with them.
Not only that, that's actually a bigger slap to the face to us, because we sell it to Mexico at like, let's say, or whatever other country, at price, and then Mexico turns around, or the other country turns around and sells it back to China at a marked up price, and we lose up on that. You see?
Yep. Essentially, it's like you should ban, like, if you find out any of those chips got over there in whatever country, you shouldn't just sell outside the country. Period.
It's always just about screwing the United States, right? It's just screw the United States, screw the people that live here, right? At the end of the day, who cares? Analysts expected the Santa Clara, California-based company to post earnings $4.63 per share, revenues of $20.5 billion, right? That's what they were expecting. Shares for the other semiconductors included, AMD, ASML, Taiwan Semiconductors, and Intel moved fractionally higher after hours trading following the results and guidance. Wow. Okay. So, yeah, there you guys have it. Now, here's the thing. This was from 4 days ago, and is this heading to this point? I don't know. NVIDIA in focus as it gets Wall Street high of $1,200 price tag. Thoughts?
It could do it. Like,
Dear
the hype is there.
What would that be? Let's go back. Let's go back to that number. Let's take, after we do the calculator. Let's take a look at the. After we take a look at the calculator, let's multiply 1,200 by the shares outstanding. And then let's see what would be the market cap. Because if that market cap exceeds more companies that...
Yeah, it will probably be the richest company in the world.
Dear Lord. Okay, so yeah, that's happening. Wall Street's saying that NVIDIA should be worth $1,200. I I don't really see it. I really don't understand it. I get that AI is the big thing, but my goodness, like $1,200?
It'd be a 3 trillion company.
You just did it?
Yeah. Rough math, but it'd be around 3 trillion.
Okay. Okay. Well, if that happens, I think they're going to overtake more companies than just Alphabet. This was from 5 days ago. Or sorry, this was from 7 days ago. NVIDIA overtakes Alphabet to become the third largest company in the United States. As of the 14th Valentine's Day. How is this company bigger than Google? Now, granted, they lost this title. They lost this moniker. But
For a moment.
But guys, I mean, NVIDIA's number 6. This thing went higher than that of Google for a moment. It passed
and it's
Amazon.
right back there now.
And it passed Amazon. It passed Google. I'm guessing they're not counting Saudi Aramco because it's
the
right.
US.
Yeah. So they're only looking at US. But how does this company? And to be fair, they're not that far off. They're only once they pass Google, they're a little bit less than $1 trillion off from getting to Apple.
Which is not a far feat for them.
No, at the rate that they're going with $1,200, seriously, what would be the market cap at $1,200 with the current share?
3.02 trillion.
Yeah, so they would surpass
They would be
Microsoft.
the richest company in the world.
They would surpass Microsoft. You expect me to believe,
no.
huh?
Because Microsoft and Apple would have sympathy plays. If chips run, tech runs with it. So you're assuming that NVIDIA can go up 81%, and Microsoft and Apple don't go up with it.
Yes, but they won't go up at the same rate. That's my point. And then also you have this, right? Microsoft said to be working. We actually took a look at this yesterday a little bit. I forgot who mentioned it in the chat, but Microsoft said to be working on networking card to cut NVIDIA reliance. So what do you think would happen if NVIDIA gets to $1,200? You think Microsoft is going to go up when they're trying to be the competitor to that of NVIDIA? They're probably going to go down.
Depends, right? Depends if they're able to pull market share. And the thing is, how much Microsoft's investing in it. As long as it doesn't, just because Microsoft is trying something, that's like it doesn't necessarily. It's like with the whole Chat GPT, right? So there was a lot of competitors, but Microsoft's Chat GPT surpassed everyone.
Right, but that's my point, though. That's my point. NVIDIA might surpass Microsoft when it comes to this. NVIDIA could be rising upwards of like 1,200, and because Microsoft is trying to get away from them, they may actually fall too, while NVIDIA is rising, right? It doesn't have to be 1 for 1. It could be negative 0.5 to 1. You get me?
Yeah, but it's also like, if you think about like NVIDIA has to go up 81%, Microsoft goes up like, let's say 20%. 20% on its current market price because of how many shares it has. Is significantly more than NVIDIA.
Okay, that's fair.
Microsoft could beat NVIDIA to 4 trillion.
Okay, that's fair. I don't know. But if the thing reaches 1,200, why wouldn't it reach even higher? Do you get me? Because right now, this is not the case so this is not the case like a lot of zombie companies that were popping up during 2021, right? Companies that were reaching stupid valuations with making negative net income, right? Negative cash flow, nonstop every day or every quarter. This is not the case when it comes to this. NVIDIA does make money. No, they don't make enough money to value. They don't make enough money to justify the current valuation, but that's not the point, though.
Yes, but it's also, if you look at NVIDIA as like, it's not going to go bankrupt, right? Like, we're not saying that, but it's parabolic. It's like, guys, go back in history and see what happens to every parabolic company. Cisco,
just look at Cisco. Yeah, just look at Cisco.
Tilray. I'm like, I can name these things all day long, and it always comes down to a 71% correction. It's always the case. It's Microsoft had its phase, Amazon had its phase. Like, I think NVIDIA is going to be worth a lot of money in the very long future. I think NVIDIA is going to be that like pivotal, one of those top companies that make up a huge chunk of the S&P and NASDAQ in the future. The problem with it is now it's just run on market makers having to just stay delta neutral. They have to keep buying the shares. They have to keep buying in because they're having to remain delta neutral. As they're selling the calls, they're having to buy the shares. So essentially, until the euphoria eventually is going to die down because people are going to run out of money to buy into this company.
Yeah.
Eventually.
Eventually,
Now,
but
is that going to happen 2 months from now, 3 years from now? I don't know. But eventually, people are not going to have enough disposable income to feed themselves and invest in the market.
that's fair. That's a really fair statement. Cuban Girl
Because the
says, great
Fed,
analysis. Thank you so much. What's up?
yep, because the Fed always wins in the end. Keep
Well,
fighting the Fed until it don't.
I guess, but I don't see. That's my problem with it. Is that
Okay, what's the Fed's track record?
that's fair.
The market versus the Fed, 100-0.
That's fair. Yeah, but the Fed's,
Zero wins for
Yeah,
the
but-
market.
yeah, but the
Zero.
Fed's, yeah, but the Fed's track record is inflation's transitory, and look at where that ended up.
It
So
doesn't matter.
I
What is
know-
the Fed's track record between the market and the Fed?
I know. All I'm saying is that the Fed right now, market's expecting cuts, and by the looks of it, we're not going to get. Hopefully, we don't get cuts, but I don't know. What are the pressures going to be with an election, right? Because you also have to take that into account. You can't separate that. You can't separate what the Fed's doing right now with the election. Because even though, yes, guys, I know the Federal Reserve isn't federal, is not a reserve, and it's not a bank, right? I fully understand all of that, but they still answer to Congress, whatever good that is. There's an election coming up in the House. Everybody in the House does get voted again, or is up for re-election. They could,
Yeah, but also why is most of Congress selling their portfolios?
okay, right, and that's something I talked about at the beginning of the stream too. You have a lot of people. Well, two of which we know, but
Disregard everyone. Why is Warren Buffett buying bonds? Why is Warren Buffett trimming companies? Why is Warren Buffett sitting on cash?
well, it's beyond trimming companies. It's trimming Apple.
Yeah, that's when that was the alarm bell of like I was starting to think like for a second because you get these thoughts. I'm like, am I wrong? Or is this going to be like the new all-time bull market? And then I see Warren Buffett do that. I'm like, no, we're absolutely screwed now. Like when Warren Buffett trimmed Apple, I'm like, nope, we're effed. Like we're screwed. Like I thought maybe we avoid the D word. Nope, depression guaranteed. Like then Congress goes and sells theirs. I'm like, everyone's running for the door, but I don't see a fire.
Yet.
Should I run for the door?
Yeah. You don't see fire, but you do smell something.
Yeah.
The fire is in like
It's
one
in
of
the
the
plutonium sitting behind you.
well, I was gonna say the fire is somewhere like opposite of the building that you're in right now, but it's there. You got me. But then again, we've been saying this. See, that's my problem with all of this is that we've been saying this for so many years at this point. I'm serious. We have, and it hasn't happened. That's why I'm just honestly, I'm getting melancholy when it comes to this because I don't want to say it's going to happen because then end of the year we're going to see all-time highs once again in the S&P 500.
Well, you're going to probably see all-time highs this week. Let's just be frank. The buying spree that NVIDIA is about to kick off, it's going to be fun.
It is going to be fun.
And the thing is, like 5,200 is going to probably hit by March. Like just being full on.
On the S&P.
Yeah.
So where are we? Where are we right now on the S&P? Let's check
33.
Let's check that. Where are we on the S&P right now? 1 second. We're if we're looking at futures, we're 50.21. If we're looking at futures. What?
Now 534.
Well, whatever. Mine's a little bit delayed, but you get my point. We're around that area, Yep. So it's incredible to me that all of this is happening in the span of, again, guys. 2022 was we had a bear market. We had a bear market on, I believe, the Nasdaq. It went below. It fell 20%. We had a correction in the S&P, and we just had a normal downtrend when it came to the Dow. And that lasted for a year. I would actually argue less, 8 months. 2023 hit, skyrocket. 2024 hit, started to feel like it was teeter-tottering there at the beginning, and then boom, skyrocket. It's just like, all right, well, come on.
Yep.
Yeah,
And
it's
then
getting absurd.
Robin Hunter says, or Congress answer to the Fed. Well, the thing is, when
Oh,
the
I see what he did. Oh, I see what he did there. I see what he did there.
what
Or Congress answers, not the Fed answering to Congress, but Congress answering to the Fed.
the boom bust cycle will happen, recession will happen. We do not know when it will happen.
Also, to what
Yeah,
extent? Also, to what extent? Right? Because
I don't think. I think that you're gonna people in Congress and selling and Warren Buffett has seen recessions before, and he's never done what he's done now. Like he sits on a treasure trove of cash going into them, but he never sells companies. Like it's just not his MO.
especially
And
not
him
Apple.
doing that, it's a little concerning because he essentially is doing something he's never done before.
Right.
He told you bonds were crap and then he bought them. I'm like, okay, well, either he's a hypocrite or he's being smart.
Though to be fair, I don't think he's the one that's doing it. He probably still has a hand in it, but I think I think it's the two people that him and Charlie. I don't want to say the G word because it's not the correct. The him and Charlie trained. There you go. The him and Charlie trained to take over Berkshire Hathaway after they're gone, which we're already halfway there to that. So yeah, it may just be
Yeah,
them, but he still has a
if
hand. In them.
if you were taught by Warren Buffett your entire time, like your career was shaped by him,
Yeah,
his values and his things would be,
I
and
agree.
I'm sure the thing is like they must have gone to him and basically said like, hey, we want to do this, and like he was like
Yeah, he
gave
probably
them
gave
their
them the
blessing.
green light. Yeah, yeah. That's
Yeah,
what I'm saying. He probably
meaning
had a hand in it. But
yeah, meaning the guy that talked that shit about bonds for so long was like, yeah, do it. It's like
yeah,
because he sees value and he sees that there's value coming up
yeah,
and that he wants to buy.
yeah. Anybody know what Michael Burry's doing right now? Because
Probably buying stuff.
I really would like to know. I really would like to know what he's
Awfully
doing.
quiet.
He has been awfully quiet. That's kind of the worry part of it. Unless we get his the SEC statement from him, you know, it'll be interesting. But yeah, that's pretty much the news for today. We just spent an hour talking about NVIDIA.
I love the on Seeking Alpha the trending analysis. A rate hike is absurd.
Oh yeah, yeah. I read that
No,
and
it's
I'm just
not.
like, yeah, yeah. I mean, I could click on it. I don't know. It's
Let's see.
stocks were overbought and sentiment was stretched, leading to a need for consolidating in the market. Okay.
Some market pundits are suggesting another rate hike is possible, but their past forecasts have been consistently wrong. Yeah, until the same bears that always tell you that there's a fire in fire in a theater until there's a fire in the theater. So retail investors continue to invest in money market funds, and they can't believe the Fed will keep rates higher for longer. That's not why they're investing. They're investing thinking that everything's hunky dory when the Fed cuts.
Right. Exactly.
That should serve as dry power to higher market levels later this year.
I think I'm gonna be proven right.
I think that New York Community Bank is about to knock off another couple percents off its stock.
There's a lot. You can't make these kinds of prediction in February, almost March. You can't because there's so much more left in the year. There's so much, and there's a big catalyst happening at towards the latter end of the year. You can't say a rate hike is absurd, dude. We need another rate hike.
You have the opportunity for many more CPI reports to damper your spirits.
Oh yeah, damper, completely nuke, evaporate. Like it's gonna be disintegrate. Yeah, yeah.
Hey,
What's
did
that?
anyone notice oil is almost back at $80?
Oh, is it really? Oh, lovely. Oh, lovely. Let's
$78
take
a
look
barrel.
at that. Oh,
I'm like,
oh, look at that. Lovely. Makes sense as to why our gas prices are going up right now. Is there a reason why or? U.S. crude stockpiles rose 7.2 million barrels last week. Gas-focused equity sway as Chesapeake's planned output cuts lift nat gas futures. Okay.
it's technical based. Okay. They bounced so much off the 200, couldn't break it, got above the 50, got above the 200 now, and yeah, they're oil's just waiting to rip everyone's face off right now.
Yeah, guys. So We did have other earnings today, aside from NVIDIA. Believe it or not, we did. But it really doesn't feel like that, does it? It really
What?
doesn't
We
feel
had
like
earnings?
Yeah, we had earnings today. Yeah, believe it or not. In fact, one of them was like Exelon, which is a utility company that is kind of cool. I used to want to own them, but I didn't really buy them ever.
We had
Rivian,
Rivian.
Rivian,
Those make a little
MPW.
bit.
Oh dear lord, dude, this company. I feel, I have empathy for people who bought into this company. Oh dear lord, look it up on your charts really quickly. MPW,
Rivian dumped.
MPW.
NPW. MSC?
No,
No.
MPW.
Net, Net Power Inc.
No, M as in mom.
Oh, PW. Main Power Group.
Oh, for goodness sakes, no.
Oh, what is it? NPW.
You heard it here, folks. You heard
Yes,
it here,
but I'm
folks.
looking. But what? Okay.
M as in mom, P as in.
Yeah. Yes, I have that.
Okay.
But it's not pulling up.
Is it really not pulling it up?
Well, what is the company's
That's the
full
ticker.
name?
That's the, okay. Oh goodness, it is Medical Properties Trust.
Yeah. So it's Medical Properties Trust Inc. Right?
Yeah,
All right.
it's the MPW. This thing has completely crashed ever since what? January 13th, 2022. I do know that there's a lot of controversies when it comes to this company. So it's not really, there's a big controversy happening. I don't even own this company. It's a REIT, don't get me wrong. But man, do they have controversy. But look at that dividend though, Mike. Look at that. We're not going to cover MPW, guys. But look at this, man. Look at that dividend.
Yeah, I found it. It's M3P for on TradeView.
Oh, okay.
It's because they're in Germany. Or they're trade on the German market. I can't find on the
No
US.
way. I refuse to believe that. They're in the S&P 500. That cannot be.
Well, TradeView, again, remember, if it doesn't trade on
It's
certain
right there.
indexes.
It's right there. Birmingham, Alabama.
I know. I'm just telling you what I'm seeing.
Birmingham, Alabama. What are you talking? Germany. What's wrong with you?
If it's not listed on Kobe, I can't access it.
Okay.
So that's why. If it's listed on New York Stock Exchange, if it's listed there.
It is listed on
it's
the New York Stock Exchange. It's on
Yeah,
the
I
S&P
can't-
500.
I know, but I can't see that.
Oh. I
It's
don't know.
whatever TradeView transacts through.
All right, fair enough, fair enough. So yeah, guys, this company also had earnings today. Again, I empathize with anybody that's on there. Rivian had earnings, Etsy had earnings, Snapchat had earnings, but even though we already
Now it pulls up?
what's that?
Now it pulls up on New York. I typed it in and now it pulls up, but it doesn't pull up when I go.
I just hear excuses. That's all I hear.
TradeView just being dumb.
Nope, excuses.
So they
Round-
basically were what, all-time low? No.
Yeah, they're essentially a penny stock
Near.
right now because
Near all-time low.
yeah, there's a lot of controversies with them. But yeah, guys, a bunch of other companies also had earnings today. But, you know, we already talked about a lot NVIDIA, but let's continue talking about NVIDIA because this is the only company that matters apparently. Honestly, I don't know why every single one of these companies should just stop their earnings on Wednesday whenever NVIDIA has, and this is just like the only logo that should be here, just NVIDIA.
And Rivian, maybe.
No. NVIDIA, period, end of story. 'Cause that's the only one that really matters. It really is. Let's see. Robin Hood there, Mike, do you think oil's going up or down? MRO had earnings today. MRO. I do not know what MRO is.
Marathon Oil Company.
Oh, Marathon Oil, yeah. How did they do? Well, how did they do? Well, let's just pull them up really quickly, maybe. MRO. Marathon Oil. I like my oil companies.
Flat-ish. Green flat.
MRO. Marathon Oil. You say flat, up 2% intraday, and then flat post market, but yeah, I don't know. I like my old companies. I just prefer my chevrons.
So
Best investment
I think
to date.
to answer Robin Hood, was it Robin Hood?
Yes.
Or yeah. To answer your question, if I look at oil on larger time
You want me
frames,
to pull you up?
sure.
Okay. I gotta pop you out though. Just give me 1 second, because you're not popped out. All right. And Good to go.
So if I look at a larger time frame, right? So you're forming a W right here. So into the first half of the year, I think you're going to be bullish. I think all the way up until August, October. I think oil is going to push up back into the 90s, form that W. Now this can change. This is a larger time frame, so it's more clear to see the more dominant trend. It came down, came back up. It's really forming that W pattern there. So I think oil just slowly goes up. It's going to be the slow boiling of the frog, because once you kind of get up into the zone, and if you break 90, then you're basically coming back up into the $110 a barrel, and you got the momentum to do it. If we look at the monthly, as you can see here, you kind of got that W forming here. Smart money flow is still on the bearish side. However, it's not red on the indicator here. So your trend's pretty weak. So again, you're consolidating, kind of trying to form higher highs. So right now you really need to get back above $80 a barrel. That'll be pretty bullish, because that would be a continuation. So dropped, gone sideways, now you're continuing up on the daily chart. As you can see here, you're kind of hitting that resistance point, but you're exhausting it right now. So definitely oil could rotate. It could definitely rotate up higher, kind of sideways consolidation of up. I don't think you would get necessarily like something like of this magnitude, but I definitely could see like, push up, pull back down, push up, pull back down. But overall, I'd be bullish on it. Main thing is like you're above all the moving averages. Ugly, but you're above all the moving averages. So right now, you probably March, April, you're gonna have the golden cross on oil. Could continue higher, and we just have to see. Really, the line in the sand, $77.69 a barrel, is where you got to pay attention to. Other than that, it definitely could be interesting where it is here. On top of SPR, they have to buy all those reserves back, and they're buying anything. They're creating a synthetic floor. So wherever they're buying, they're creating a synthetic floor, which I think a lot of this was responsible for that right here, where oil just could not break that floor of $70 a barrel. Like it tried and tried and tried and tried and tried and tried. It just, you exhausted sellers. You once sellers are exhausted, buyers only remain, and the stock goes up. Or in this case, the commodity goes up. But there's no reason oil is going to come down back to like $60 and $50 a barrel, because one, you have OPEC, two, you have super huge demand, and it's not shrinking, right? So the amount of products that are tied to oil, it's not like going back to like the 2008, 2000s, where oil wasn't as prevalent. But
Prevalent.
Yeah.
No, and that's the thing too. It's like when it comes to oil, we're also not making any more, or at least there's a lot of regulations when it comes to it. And until we get somebody that says drill baby drill, it ain't going to go back down. So, but let's guys, let us move into the actual earnings that we wanted to cover for today. And again, a bunch of earnings. Yeah, the only one that really matters is NVIDIA. So let's take a look at NVIDIA. Oh boy. So we already talked a lot about this. We just spent an hour and 9 minutes, almost 10 minutes now, talking about NVIDIA. And we're going to keep going. Guys, again, I'm going to have to reiterate this every single time. Mike, question. Do you like NVIDIA? From a company? As a company?
I don't like their business practices as a consumer.
Okay, well, what about products related?
Yeah, I like their product.
Okay. Guys, this is not a dig or a jab at NVIDIA's products. I like NVIDIA's products, right? I think they're the only ones that make that kind of quality graphics cards. I know AMD's trying to get into it, but let's face it, no.
They've been struggling.
Yeah, it's NVIDIA.
AMD's made strides, but it's just like the technology is architecture generations different.
Yeah, you got to stick with CPUs for now. AMD, right? That's where your bread and butter is. Stick with it. NVIDIA
Go kill Intel, then come for NVIDIA.
Exactly. Well, Intel is just you know my opinion about Intel. They're switching from IP chip making to physically chip making. So I think they want to be.
They're like an MU, like
Well,
a Micron.
Well, I would actually argue that they want to become the TSM for the US.
Probably.
Strictly just manufacturing, nothing else, which is great because then that means everybody's going to go to them. They would essentially have a monopoly, like, by themselves. You get me?
Yeah.
But when it comes to NVIDIA, the problem with NVIDIA isn't the company, right? It's not the fundamentals. Actually, the fundamentals look really good, at least in the 5-year perspective. We haven't taken a look at this in the 10-year perspective. That could be an entire new thing. But it's not a problem with the company. It's not a problem with the fundamentals. It's strictly valuation. It's strictly valuation. This company, now granted, their PE isn't as big as AMD's of 1,500. I get that. It's good in that sense, but the PE is still upwards of 90. So it's still massively overvalued. So, yeah. Take a look at this. This is NVIDIA right now today, guys. They fell intraday 2.85%. Granted, the whole market was falling. Post-market. Mike, would you like to tell us what you did, good sir? Mike? There's 33 people watching and you're not responding now. All right. Well, guys, drop the L's in the chat for Mike right now because he desperately needs it. Hopefully he didn't answer his phone because that usually means something bad's happening at his job, meaning he has to go. But yeah, guys, basically Mike let me actually read it verbatim as to what he told me. Let's see. I'm going to read it verbatim because I don't want to say this the wrong way. So let's see. I'm looking up what he told me earlier today. So, played the 697.5 and 705 call debt spread on NVIDIA. Going to get back $500 from it tomorrow. Wow. So, there you go. Mike just made $500 on on a spread, on an NVIDIA spread from 697 to 705. I don't really know how spreads work. I'm not really familiar when it comes to that. I mostly just sell put options. That's really it. What I do. I don't go beyond that. I do know of like what iron condors kind of are, and what iron butterflies and reverse iron butterflies, that kind of stuff is. But I don't really delve into it. I mainly just stick with selling puts and be done with it. I don't know if what he means. I don't know if a spread you want it to be between the two prices. So like 697.5 and 705. What happened?
Depends if it's credit or debit.
Okay.
So if it's credit, you want it to expire completely worthless. If it's a debit spread, you want both of these strikes to be in the money.
So what's happening right now with this thing up 9.08%?
Me very happy.
Oh yeah? How much are you up?
Well, the thing is with spreads, it caps your profit.
At?
So depending on the width of the spread is the maximum profit. So you take max profit minus the value you pay for the contract.
Uh-huh.
Because it's debit. So I'm up basically $500.
That's great, dude. You just made, bro. If you keep that, you just made. If I have no doubt in my mind that this thing will not continue. I have no doubt in my mind that this thing will continue to go up tomorrow. Congratulations, my dude. Just made $500. Huh?
I'm catching out on an open.
No, I get that.
500. I'll take the $499.
Regardless, my point being that congratulations, dude. You just made $500. That's so crazy. Congratulations, man. Congratulations. Seriously. Yeah. Congratulations.
Risk now, 200, make 500.
Now here's the thing. I could honestly have played it, but dude, I don't know.
It's too risky. It's just too risky because that's 67 grand if you play if you just do the covered call.
You're right.
Not covered call, the put.
Well, yeah. Also, at least for me, I get a lot of people I get that a lot of people could tell me, well, if he's doing it and he's making out, why don't you do it? Well, it's because it's not my strategy. You know?
And I'm also experimenting with it, guys. Like, this is the first time I've had pretty good success with earnings, just doing debit spread.
Also because of this.
Yes, also because of this. I've been using that for quite some time to understand like what the favoritism or favoritism is,
Yeah.
and like learning what to pick. Like I've had my ass handed to me
By
also.
PayPal. By
So
PayPal. So yeah, but so
by
for your track record,
PayPal,
so for
by
your
Intel,
yeah, but so for your track record's really good though. I think you've
it's
won
like
more.
50-50.
No, no. I think out of most of them that you have done it
I played
with,
Netflix. I played PayPal. I
which
played Intel. I
uh-huh,
was gonna play Crocs
but you
up.
couldn't because
Well, I forgot.
right, right,
Like,
right,
so I played NVidia. I played Microsoft.
right. And you won in most of them. I think the only two you lost was
Yeah,
PayPal, and Intel. That's what I'm
yeah.
saying. So
Still,
congratulations, congratulations
yeah.
though.
Then Futures gave me a nice bloodbath a couple days. So
Yeah,
it's
yeah,
like,
yeah. But
okay,
that's not.
Futures, come give Papa your money back.
Yeah, 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 but that's not a company, right? Futures aren't a company. I'm talking about specifically for
Yeah, yeah.
earnings.
It's gonna
So
be, definitely next earnings season. I'm gonna be a little more aggressive with it, just
okay.
because again, I've been. This is
Well,
the quarter that I wet my feet in it, and then I kind of like create the rules of the road. I'll share with you guys. High liquid options requirement number one. Requirement number two, it has to be swinging to one way, and it can't be running in that direction into earnings. So, like, for example,
NVIDIA,
at
perfect
Intel,
example. No, NVIDIA, perfect example.
well, it was doing the opposite.
Right,
NVIDIA was going down while it's saying it's going to go up. It's
right.
That's the perfect setup because it's like
It gives
double
it
counter
room.
move,
It gives it room.
double contrarian.
Right. It also gives it room to go up. You know?
Yeah. And the thing is, I'm buying like, so I bought the, let me pull it up on trade, Tasty Works, but I think I bought the 40 Delta and sold the, let me pull it up because I can't remember for the life of me.
Okay, you can pull it up. I give you permission. You got it?
Yeah, I was typing. I muted the mic so you wouldn't hear the clickety clackety cluck.
Oh, that's fine. That's fine. That's fine.
But yeah, I was looking, and the thing is, like, you can make more money playing the larger out, right? So, like, hypothetically, if you played like right at the one standard deviation, the same width strikes that I did, you would have made more. So, like, you'd be like 4-1, but your probability is less.
Right.
And the thing is, like, that's 760 is what the outer strike move was, and NVIDIA is what a post market.
NVIDIA right now post market it is 736 essentially.
Yeah, so you wouldn't have made any money. So right, so my strikes were 705, 695. So I bought the, if I can ever find, oh, the delta's already updated. Darn. So it was the at the time of buying them, guys, it was the 40 delta a strike, and then sold the 38 at 36, and that was around 2 o'clock. I bought
Yeah.
that one at 2 o'clock just because I would have bought it 345 normally, like just full transparency, but because it was plummeting down, kind of looking like a double bottom, I was like, hey, I'll take it, right? You know, I think I believe in my assumption here, right? That's why I'm playing it,
Yeah.
and it was pretty. It was profitable, right?
Very
So,
profitable. Very. I'm gonna say pretty nothing. It's very profitable. Now you say the next earnings season you're gonna go further in. Here's the thing, dude. We're still not done with this earnings season. You got a lot of companies next week that are reporting. I.e., I know we're supposed to be talking about NVIDIA, but you know you got Lowe's reporting, I believe, next week.
I will be shorting the crap out of that company.
Yes, you should. Well, I love how you already knew exactly what to do before I pulled
They
it up.
cut our volume again. I have a vendetta against this company, even though they're proving me right at work. I'm like, I need to go. Like, I know what their earnings are going to be crap, guys.
And look,
They're
it is,
gonna be
and look,
absolute crap.
it is running in the opposite direction of what they're doing.
Let's take a look at it.
Yeah, they are up to their 1%.
Track the video, but
They're
I
up
just
to their
wanna
1%, and if they're up to
wow,
their
they're
1%.
running. They're literally running from their last earnings.
Yeah.
I'm gonna enjoy shorting them.
All right.
When are they? Tuesday?
Let me see. Yep, the 27th, which is Tuesday. That's next.
I will
Tuesday.
I will definitely be shorting them, guys.
Well, good luck with that, dude. Hopefully you make out. Hopefully you don't go 6-3, right? Right now I think you're like 6-2.
I'll make sure I don't give the money back in futures.
Yeah.
I'll either make money for futures to pay my Lowe's debt, or I I won't play it, so we'll see.
Yeah. But guys, NVIDIA is completely running up right now. So Mike, thank you for that. Thank you for explaining your thing, because a lot of people do tell me, well, why don't you just do the same thing that he's doing? Well, it's because, guys, it's not my strategy. My time in the sun will come. It's just my thing is about buying companies at good valuations. That's it. That
Stop trying
really
to
is
force strategies. Like, guys, like,
well, no,
find what you're good at.
Right, and I'm not talking about anybody here in the chat or even like in the comments section.
I'm saying in general.
Yeah,
I'm saying in general. People like they see YouTubers, they see like all these people like doing this and that, and I'm like, day trade, right? Like, I'll use that as I have to day trade to make money.
No. Incorrect.
I've made more money on futures by putting a volume profile rotation on overnight, going to sleep, and waking up with more money in my account.
Yeah. When it comes to investing, you pick whichever one you pick whichever strategy fits your style the most, right? It's almost like a video game, right? You could either be the mage, you could be the paladin, you could be the whatever. It really just depends as to the healer. It really just depends as to what your play style is.
Why, Robin Hood? Why did Lowe's make you mad a year ago?
Oh boy, something had to do with their services or something. But in regards to it, guys, yeah, just pick a strategy, and if that's the way that you prefer it, if that's the way that you feel most comfortable playing, the stock market. I wouldn't even say playing, but investing in the stock market, then stick with it and do not deviate. That's why a lot of people are saying, well, why don't you invest in Rumble, right? Why don't you invest in Rumble if you're partnered with Rumble and if you like Rumble? Well, it's because the fundamentals don't make sense to me. I'm not going to break my cycle. I refuse to break it. I like the company, but the fundamentals are trash, especially from a net income perspective and cash flow perspective. Well, I'm sorry. That's just fact. You get me? But I like the company. I think they're doing great stuff for free speech. I hope they keep going. But from a fundamental perspective, I'm not going to break my rules. If that means I lose on uptrends, but so be it. I really don't care. A lot of people have told me, are you going to buy DWAC now that it's going to go IPO? I'm like, no. But all the money.
That should answer your question right there. It's an IPO.
Well, no. Not even that. It's just the fact I'm not going to break my rules. Period. I don't care, right? I don't care. I'm not going to break my rules. So, yeah. But NVIDIA is the one that's breaking my rules right now, mainly because it's horrible when it comes to valuation. So, we already read this, right? NVIDIA gains as Q4 results gains beats expectations. We already read this. Let's take a look at this really quick. NVIDIA non-GAAP EPS of $5.16 beats by 52 cents. Revenue of $22.1 billion, exactly what Mike said. You said 22, and it did 22.1, so that's amazing. Beat by $1.55 billion. That's insane. This is Q4, and did $5.16, beat by 52 cents, which is a lot. Revenue of $22.1 billion. Dude, look at how much that's up year over year. Look how much that's up. Oh my goodness, look how much that's up year over year. 265.3%.
They're up more year over year than some companies on 10 years.
Yeah. They're higher. They're more high. I think they're higher than that of like Microsoft. Can you look up Microsoft's year over year? Sorry, their 10-year like increase when it comes to like the share price?
No idea how to do that.
You have no idea how to do that?
You're asking the wrong person.
You can't look at the chart.
I can look up 10-year. Well, what's
because I would have to type in the revenue for Microsoft. That's why in order to see that. Regardless, that is still a stupid amount. That's an insane level that it's almost unimaginable, honestly. Data center revenue for the fourth quarter was a record of up 409% from a year ago and up 27% sequentially. Gaming revenue was up 56% from a year ago and flat sequentially. Professional visualization revenue up 105% from a year ago and 11% up sequentially. Automotive revenue down 4% from a year ago and up 8% sequentially. And then the outlook. Okay, so we already read a little bit of the outlook as well. When it comes to the first quarter, again, they're not really projecting the whole entire year of 2025. They're just projecting the first quarter of 2025. They're expecting $24 billion as an increase of $2 billion from now, and the consensus is $22.03 billion. So, yeah, what's up?
So they did Microsoft's 10-year revenue in 1 year.
They did. No, wow. They did Microsoft 10-year revenue in 1 year.
Percentage wise.
Percentage
Yes.
wise, yeah. Percentage wise, that's insane. All right, yeah. So there you guys have it. Again, we really spent an hour just talking about this. Not gonna go any further. Let's take a look at what the actual earnings. Again, this is linked in the description below. We already went through this so much already. I do want to take a look at what the CEO said mainly. So, quote, accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. Okay, we really read this. Our data center platform is powered by increasingly diverse drivers, demand for data processing, training, and inference from a large cloud service provider and GPU specialized ones, as well as from enterprise software and consumer internet companies. Vertical industries led by auto, financial services, and healthcare are now at the multi-billion-dollar level. Wow. NVIDIA RTX, introduced less than 6 years ago, is now a massive PC platform for generative AI. Yeah. Enjoyed by 100 million gamers and creators, the year ahead will bring major new product cycles with exceptional innovations to help propel our industry forward. Come join us at the next month's GTC, where we and our rich ecosystem will reveal the exciting future ahead, he said. And guys, guess what? For all of those of you dividend investors, NVIDIA will pay its next quarterly dividend cash of, Mike,
4 bloody cents.
4 cents per share.
Like, you couldn't increase it, right? You couldn't like just stop making it, because like it's an insult to a pity dividend.
Yeah, at that
Like,
point,
it's
I
not
would just
even-
say, just stop paying it, dude. No one's investing in your company for a dividend, dude. Seriously, just cut it, and save on that. Just stop. I'm
Save
serious.
on the tax system that you have to file and
Yeah.
employ.
Yeah, honestly, exactly. Yeah, save on that, right? Save on that. Buy back shares. Use that money. It really isn't much that they give on dividends, but use that money to buy back shares at this point, right? So, yeah, 4 cents, guys. That's 16 cents per year. 16 cents per year.
shares. I can't imagine what the price would be doing.
Okay, fine. Pay down debt. How about that? You know, you don't want to buy back shares then because it's too expensive. Then pay down debt.
They need to keep the Ponzi scheme going. They need to keep that breaking revenue so all their founders can get out while the getting's good.
Apparently. But yeah, guys, this is mainly it. Do they have anything? I mean, we got over here the outlook when it comes to the GAAP and non-GAAP. You can see over here, GAAP and non-GAAP gross margins expected for the first fiscal quarter of 2025, 76.3 and 77%, respectively, for the GAAP and non-GAAP. Operating expenses to be approximately 3.5 to 2.5 billion for the GAAP and non-GAAP, and then other income and expenses are expected to be an income of approximately 250 million, excluding gains and losses from non-affiliated investments. And lastly, tax rates are expected to be 17% plus or minus 1%. So there you guys have it. Right, there you guys have it. We already read most of this already, so yeah, if you guys would like to read it for yourselves, link is in the description below. I think now let's get into the part that people are really interested in, which we're making great time, by the way. Let's see. Before we do that, though, before we move on into the calculator, let's take a look at chat. Robin Hood says, their woke agenda. Well, man, okay.
I wasn't aware they really dove, like, again, I don't follow those much, so I don't know what they did.
I don't think that they have done anything. Not that I'm aware of. You know,
Maybe hiring practices, but
yeah,
I don't know.
But which company
kind of
isn't
like every industry?
Exactly. You know, do I like that? No, but if you're going like if it's based off of that, then you have to boycott every single company out there, right? Maybe the only one I could think of that isn't doing that is like Tesla. That's about it. Maybe, and even that yeah. I'm not fully sure of. But every other company is doing that, so it's like, all right, well, you know. What more could you do? But I really am curious. What do you mean by their woke agenda? Because I follow news pretty closely, and I haven't heard anything from them regarding. Like I've heard of Target, obviously. I've heard of Oh my god, this wasn't
Nike and
Nike, Bud Light, right? That Anheuser-Busch, not Bud Light, but Anheuser-Busch. We've heard about those, but Lowe's, not really certain about that one. No, yeah. Hey man, if you don't like it, that's fine. Mike, if Lowe's does end up falling, like how you are predicting it is going to go, I do own Lowe's, and we do plan on covering it next week, so maybe a good time to buy a few shares here and there. So, yeah. All right, guys, Mike, here comes the fun part. You ready?
yeah.
Calculator time. I have updated it, guys.
Hey, at least their PE is not 1,000.
It's not 1,000. It's only 89. Yeah.
That's actually surprising.
Really?
A little bit.
Really?
I thought it'd be 200.
Well, my
200,
dude,
300.
it's probably 200 now. Remember, this is at close.
Yeah, we'll see.
I'm just saying, we don't get to see the PE
11%
now.
is not going to make it that much.
I also love, ticker symbol, guys, of NVIDIA, market cap of, why does that have to happen? Why? Is that a thing? Like, is that it?
They were $666 a share today.
Oh my goodness. Yeah,
When I
at
bought
one
my
point.
spread.
Okay. Well, okay.
I just find it funny.
I conspiracy theory. Why did NVIDIA end on their earnings at $1.666 billion or trillion dollars? Sorry. All right. Market cap of $1.67 trillion, PE of 89.09. Still not the biggest that we have seen. AMD 1,500. Stupid. Current share price of $674. We already took a look at this, but let's take a look at this one more time. Guys, I mean, 226%. Also, 666 right there too. Dear Lord. On the 1 year, they're up 226.66%. Year to date, they're up 35. Year to date, it's been a month and 21 days. This thing is already up what companies do in a year.
It's got to do that 200%. It's
Dear
got to do
Lord.
that 200% year over year.
36.25% just in the year to date. And this is after coming down a little bit. Granted, right now they're up even more, but still. 52-week low of 204. 52-week low of 204. They were a year ago. They were $200.
Yeah, because a year ago was around the time we were saying that they're all crazy about their prediction. Remember?
Yeah.
That's when it started.
And look at
that's where it started around
right
$200.
here. Right here. This is when the rise just started to happen. Right here. Oh dear Lord. You could just tell exactly when that happened, man. Oh my God. That's crazy. I really wish Vinny was here on Rumble, because I really would like to be like, hey man, so 57,000.
When are you not selling those shares?
Yeah, like that, at that point, man, that is absolutely crazy. And because that's the thing too, like they don't even pay out a good dividend, so it's selling the shares wouldn't even matter. You get me? It's essentially like buying like a Google that doesn't matter.
Depends if you believe they're going to do 200% this year.
Well, I'm talking about from a dividend perspective.
Yes. Okay.
Right.
Fair enough.
Yeah. So is this at all-time highs now? Question. Or is all-time highs really 746?
The WICT all-time high price is 746.
Wow. So we're pretty much near that again. We're about $10 from it.
We'll make new all-time highs tomorrow.
Yeah, most likely. Absolutely. All right. Let's come back over here. They do pay the dividend of 16 cents per share per year. And, all right. This is, sorry about that. This is a yield of, Mike?
0.02%.
That's a yield. That's the yield. Wow. A payout ratio doesn't even get to 2%. 5-year CAGR of less than 1%. 0 consecutive years of dividend payment. I don't even care about this. This isn't even count. They pretty much, I don't think they've ever increased the dividend either. Ex-dividend date passed as of December 5th. Payout date was on December 28th. They pay the dividends quarterly. All right. This 16 cents. Okay, this 16 cents is $395 million they pay out every single year. Take the 10-year average free cash flow, subtract this $395 million. They're left with $2.7 billion. As of the last year's free cash flow is $3.4 billion. These payout ratios are, get rid of the stupid dividend at this point. Seriously. Like, seriously, get rid of the stupid dividend at this point. This is stupid. 10.36 for the last year's free cash flow and 12.77 for the 10-year average. Get rid of it. Come on, guys. Come on. Absolutely get rid of it. All right. Mike, the first time we'll take a look at this company when it comes to the fundamentals on the 10-year perspective. Net income. How does this graph? Well, actually, let me just get your first opinion. So what do you think about this graph?
Yikes.
Yeah. It's, you can tell when the chip shortage was happening, right?
Yep.
Yeah.
2 years ago.
Yeah. 10 years ago, guys, of $444 million with an M. To 1 year ago of $4.4 billion. Increase of almost 900%, 893 to be exact. Massive spike right here. But you can see that this was coming up nicely. They had a few things here and there 8 years ago. But this was coming up nicely. They fell 4 years ago. COVID, right? That makes sense. And then 3 years ago, right? Because if this is 1 year ago, this is... Ooh, actually, hang on a second. I need to preface something here, though. Hang on a minute. So, okay, so yes, this is 2023, 2022, 2021, 2020. Okay, I thought that... Okay, just make sure. But, yeah, this is 2023, 2022, 2021. So the chip shortage, I believe, happened in 2022, right? It didn't happen in 2021.
Yes, it happened in 2022.
Okay, that makes sense. But you can see nice consistently increasing right here.
They were almost like you kind of leveling off the 3, the 1, the 5, right? So like you could have, their income is just leveling off, which makes a little sense, right? Materials are getting more expensive, and
yeah, except one little problem with that. I caught that when I flipped over to Seeking Alpha.
Oh.
Oh.
Yeah.
$18.89 billion.
Wowza.
Yeah, talk about just giving 2022 the middle finger. Talk about chip shortage. Pfft, please, you don't have anything on us right now. Yeah, $18.89 billion, guys. So yeah, not reflected here, but this is going to make this thing completely just null and void. So what do you think about this, man?
Parabolic like all hell, where I have no idea what's gonna happen next. Well, the thing
I don't even know about parabolic. It's not even parabolic. It's just all over the place. Parabolic, at least you have some kind of movement.
No, just a straight line up.
Just
a straight line up.
Yeah. So what do you think?
And that percent increase is about to get way bigger.
Way bigger. Somebody say hugely, bigly bigger.
I'm gonna say 80 for the sole reason that I'm concerned it coming back down, right? So
80?
Yeah.
Okay.
I want to see more sustained increases. Like 1 year doesn't make a trend.
Right. Absolutely. That's why I'm actually going to go a lot lower. I'm going to go with like a 60 because I'm looking at this. I'm like, there is no trend here. There's absolutely zero trend here. I look at this and all I see is, all right, this makes sense. Obviously, this makes sense. But you can see stagnation here. Even if you don't take that 18 billion, you still see stagnation right there. And if you do include the 18 billion, that's just an outlier, right? All I see there is just an outlier. You're gonna have to prove to me way more years in the future that same consistency of 18 billion plus, right? 18, 20, 21, for me to actually start considering it a trend. Right now, this is not a trend at all. So, yeah, free cash flow actually does look a little bit better than that of the net income. 10 years ago of 580 million, 1 year ago of 3.81 billion dollars, increase of 557%, and that is on average $3.1 billion. Again, aside from the 2 years ago, this isn't looking half bad, right? Now, it did fall from 4.7 billion to 3.81 billion from 3 to 1 year ago. So I'm not, I really wish I could tell what the trailing 12 months was, but you really can't do that when it comes to the free cash flow because, well, actually, you kind of can. The cash flow is the same, at least cash from operations, 18.84 billion, and well, the capex is 1.34, so or 1.32. most likely that thing's going to spike. It's going to look exactly the same as the net income, basically. So what do you think?
Uh, by again, same as similar grade 80. Just because this is a little more consistent, but then it's like you're just blowing the trend completely out.
Yeah, I'm gonna go with like a 70% because there is more trends here, but we have not. I can't make heads or tails of what's going on, especially on the trailing 12 months, right? HC says this won't last. It has lasted for like a year and a half now. I don't know what to tell you. You know, yes, I agree with you. At some point, it will stop. But man, this is looking real. This is going real stupid right now. Revenue, 10 years ago of 4.13 billion to 1 year ago of 27 billion, increase of 553.12%. And we can see that massive spike from 3 to 2 years ago. And you can see that even in revenue 1 year ago, from 2 to 1 year ago, it is an increase, slight increase. It really wasn't much though. But would you like to see what it is now on the trailing?
Sure.
Oh boy.
Revenue has to be some insane number.
44.
Jesus.
44. So from 27 billion to 45 billion.
That's the same grade for me. I'm not going to change the stance of like it's phenomenal, and this one's actually a little bit better because of the 2 and the 1 being high, but
Yeah.
then just like stair step rocket.
Yeah, I'm actually going to give them a 75 when it comes to this one because I do like the trend. I do like, well, I'm okay with this being like that, but man, I just don't really understand it. Assets, here are the assets, Mike. Good. So assets are increasing, and this is the trailing 12 months assets. So see, if the graphs look like this, I wouldn't mind this too much, right? This for me,
you don't have the 3, the 2, the 1 reinforcing it.
right? Exactly. If the thing looked like this, I would be like, all right, that's like an 85, 80%. But what we've been seeing, it really isn't showing that. Liabilities, you can see a massive spike as of 3 years ago, right? That makes sense. Assets minus liabilities, honestly, it looks good. I like it. It's consistently, I wouldn't say consistently increasing. Obviously, it's not, but you can see
some correlation.
there is a trend, right? There is an overall trend. Even right here where it starts to get a little bit muddy, you can still see the overall trend on, like when you zoom out enough. Average total assets being almost 22 billion. Wow, they have a lot of assets. Liabilities of 8.62 billion. And this is a difference of $13.4 billion. Okay, so what do you think?
For me, it's going to be a 95 just because like there's some correlation to the price. If you go like from 5 years ago, the 10 to 4 or sorry, 10 to 5 has been just kind of a very stagnant.
Yeah. Yeah, I'm gonna go with a 95 as well. Yeah, I'm gonna go with a 95 as well. I do like the graph in general. Okay, cash flow minus liabilities. Now look at this. By the way, I did decide to keep the trailing 12 months. Just FYI.
Gotcha.
Yeah.
It's very interesting.
Also, wait. Also, wait. I completely forgot to tell you. The trailing 12 months one is not the actual one on Seeking Alpha. It's the one that's projected on the calculator. So it's technically not correct. Gotcha. So because the trailing 12 months hasn't happened, I'm basically saying that the trailing 12 months is part of the projections of the year, of the next upcoming years. Make sense?
Yeah.
So that's why. Okay. So yeah. All right. So let's come back over here and cash flow. What do you think? They had some times where they were increasing and come back to zero. You could, I mean, yeah, they were probably just here. Honestly, reinvesting back, right? CapEx.
Yep.
So, I mean, what do you think of this?
I think they've turned around, right? Their cash flows positive to the reliability.
Well,
so
we don't know that.
Okay, fair enough. But it's a pretty strong reversal. You don't go from there. So like they're getting divot returns. So for me, it's an 80 just because it's not affecting anything, right? And you have to see how it plays out if the other metrics start dropping and stuff like that. But I don't think that they're gonna anytime soon that they're gonna go anywhere.
I'm going to go with a 70 because even though this is negative 15.3 billion, the average being negative 3.7, negative 3.7 billion, they're mainly putting it to reinvesting back. They're putting it back into the whole AI thing, so can't really fault them for that, right? All right. Yeah, shares outstanding now. I think they need to cut the dividend. Now, here's the thing, right? Here's the thing. I look at this, and yes, they are increasing on the 10-year. Can you blame them?
No, not really.
If my share price, if my company's share price was upwards of what they are right now, I'd be mad that they're not issuing shares. Straight up. 10 years ago of 2.3 billion shares. Let's just say the exact number. 2.27 billion shares to today of 2.46 billion shares as issuing of 8.54%. Previous year to the current year, a decrease of 1.6. You can see that they did buy it back from 2 to 1 year ago, which does make sense. This was during the chip shortage, so they did buy it back, but all in all, it's a massive increase. Well, I wouldn't say massive, but we have seen companies like AMD that issue like 20+% shares. But this is still pretty big, but I don't really blame them for it. So what do you think about this?
I don't like. You kind of took the words right out of my mouth. You can't really blame them for wanting to like
Capitalize.
Take advantage of everyone quadrupling their share price.
Yeah, for everyone's addiction.
Yeah, it's like, do you blame the drug dealer selling the drugs? It's like, I have drug addicts in order to do that.
So what do you think about this?
For me, I like it, just because of what happened. Right now, they consistently were increasing over the course of like 10 years, but recently, like they bought back, and I'm like, I think they should be issuing right now, especially considering what their share price is.
Absolutely.
So to me, it's like if you can generate more income from issuing shares, I'm like, you should, especially where you now, like of how massively priced you are.
Right.
So historically speaking, they're in a good spot. I'm gonna say 90.
90?
Yep.
Yep. I'm gonna say roughly the same as well because they buy back when they have to buy back. They issue when they have to issue. And I'd be mad if they're not issuing right now. Straight up. I would be so mad if they're not issuing right now. I'm going to say roughly like an 80 for this. Because even though it is still increasing, I don't necessarily like it. But I do understand it. So I'm not really going to penalize them for it. Let me just hang on a minute. Let me just delete that and then rewrite it. Let's see, 80%. All right. And lastly, cash and equivalents they currently hold. 5.52 billion with an average of 2.86 billion dollars. Okay, so 10-year grade, 73% for me, and yes, this is updated, guys. And for Mike, we got 83%. So we're 10 percentage points above, apart. Mainly because you think that the profit metrics are actually decent. I think that some of them are okay, but some of them aren't. Some of them aren't good. So yeah. Would you like to reiterate as to why you're choosing the 80s or what?
It's just it's a grade that you can modify in the future. It kind of gives you a pivoting point where if they continue, then they're going to be closer and they're going to be establishing that trend, so it gets closer to the 100.
Right.
Versus it gives me room to downgrade it further if they're not establishing that trend.
Right. Yeah, that's why for me, I'm mostly just I don't know. I'm mostly just saying that it's I just feel really uncomfortable with the spikes, man. That's the problem. It's the spikes. I get the one spike, and the current one I get two. My issue is, the previous one, it was external. This one isn't. So that is a little bit more hard for me to grapple with. You get me? External stuff that's fine. Just like how when oil went negative, I looked at Chevron and I'm just like, yeah, absolutely. It's not their fault. How is it their fault that oil went negative? It wasn't. With NVidia now, with the whole AI thing, I'm just like, they're pushing this AI, man. It's getting scary, right?
Yep.
So, all right. Ready to go for the fun part?
Oh, yeah.
All right. I can't wait to lose people here. We're making great time, dude. We're 10 minutes away. We did 2 hours on one company. That's absolutely crazy. All right, guys.
And then HC says, buy 2 more quarters, buy more NVIDIA.
2 more quarters that won't last. I don't know. We've been saying next quarter they'll fall for the past year and a half, and it hasn't happened yet. In fact, we've given up at this point. So, But let's take a look at this, guys, because this is where I'm going to lose probably a lot of you. What price do you pay for this thing? Because it's overpriced. Well, this kind of free cash flow on the 10-year, nonetheless. Yeah. Not adjusting for debt, guys. 190. Is that correct? Did I mess this up again? Why is that 198? I don't have anything input in there. Why is that 198? Oh my goodness. Oh, it hasn't updated. I am so sorry. So sorry. It didn't update. My bad. There we go. Sorry, I had another stock in there before. It didn't update. All right, so this kind of free cash flow, guys, not adjusting for that, $91. $91.82. Adjusting for debt, it does go up by around $100 or so. 185.87. All right, so how many people did we just lose there? Yeah, okay, so we've lost about 2 people. We're down now to 22. It was 24 before. Now we're down to 22. So, yeah. Thoughts, Mike?
Let's see what happens when we throw some assumptions in there.
All right, let's throw some assumptions in there. So, what do we got for the shares outstanding? Go. They're issuing at around 8.5%. Again, quality of life improvements right there.
Let's say they issue 8%, 4, and 0.
Really? So you want -8, you want -4, and you want 0. Okay. And for the revenue on the 10-year?
All right. 450%. 500 and 550, please.
Guys, okay. I don't know which way this would be better. Again, I did it so that whatever number you put in here, it would be divided by 10, right? You could say that, or you could say, if I don't divide it by 10, we could just say, something along the lines of like 20, 30 or something like that. Basically, that's the same thing that you would get if you divide it by 10, right?
Yeah.
So you can do it, or I like it this way just because we have the comparison with this number. So I like doing it like that. So what'd you say?
I said 450%.
Dear Lord.
Well, 500. And 550.
Yeah, no. Well, to be fair, you said what, 550?
Yeah.
I don't know what to believe in. I don't know. I don't know.
Well, they're doing that's assuming the current performance. So okay,
right.
So let's walk it back.
And
so
and that wait. And Wall Street literally just said that they expect $1,200.
Yeah. So okay. So lowball it, right? It's just lowball it. And this is over 10 years.
Yeah.
So
this is over 10 years. Guys, please understand that this is over 10 years. Let me put it into perspective. 10 years ago, we were in high school. All right. 10 years ago, it was 2014, and we were still in high school. FYI. So, yeah, a lot can happen in 10 years. 10 years is a long time. So,
yep.
10 years, you go from being 10 years old to being an adult. Just FYI. So, all right, go.
So, going back to what I was saying, if you half it, you're still getting gonna get 250 to 5,000. So,
what number do you want me to put here? Because here's the thing, right? Hang on a minute. Here's the thing. Let's take a look at this. So, looking at this, this one right here is for the one that is let me see if I could do this and then make it bigger. So this right here, guys, is this one. Basically, everything in the blue is with that assumption of 450%. So basically, for the total revenue, for the trailing 12 months, is expected to be $39 billion from $27 billion in one year ago, right? That's not too out of the question. You get me? That's not too out of the question. From 27 to 39, that's not too out of the question. 56, not out of the question either. 82, remember, this is basically 100 and this is 450 divided by 10, which ends up being 45% increase year over year. Well, 45% increase on 82 billion ends up being 119 billion. And then 49% again off of 119 billion is 173 billion. That's the reason why the numbers are coming out the way that they're coming out. Mike?
Yeah.
I'm just letting everybody know how this is actually working out, right?
So their 10-year would be 1.6 trillion in revenue.
Yeah.
Jeez.
But that's 10 years from now.
Yeah, there's a lot of time to print money.
It's a lot of time to print money. It really, really is, right? It really, really is. I have no idea. Maybe honestly, I'm thinking about this now. Is this kind of free cash flow a good way to do a 10-year analysis on this?
Maybe not.
And maybe not on this specifically, like as in like NVIDIA, but just in general, right? Because again, I am taking that value right there, the 10-year valuation 52, which is this one. Which is this one, right? The 450, dividing it by 10, so that would give you, what is that? That would give you 45%, right? But that's 45% every year for the next 10 years. Do you get me?
Yep.
So I don't know. Now, if you were to put 45%, right? But we haven't seen that in the past 10. In the past 10 years, NVIDIA is not going up 45%. 553, right? It's 553. So I don't know. What was NVIDIA's price back in 2014? Just a question.
2014?
Yeah.
I'm going back a while. Just give me a second.
I mean, I could probably do it faster.
$4.
Were there any stock splits? Well, I guess it already adjusts for stock splits.
Yeah, they had a stock split in 4-to-1 split in 2021.
So I get that the numbers. So here's the thing. I get that these numbers. Let me go back to the 450. I get that these numbers look absurd, right? But NVIDIA just went from $4 to $600 in 10 years. If the trend continues, what do you expect? You get me? I don't know. We may have to come up with a new way to analyze the 10-year ones. Not gonna lie. This may be one that you and I need to sit down and just think of it. Okay, well, come back to earth, I guess you could say.
Yeah.
But I don't know. That's interesting. Do you want to change it up? Because I don't know. These numbers look absurd. They really do. Like I'll straight up say, I don't know if this kind of free cash flow works for the 10-year perspective. I thought it would, but maybe not. Maybe I have to come up with another one.
It's because they're meteoric, not meteoric.
Meteoric rise. You're right. You got
meteoric rise. So in reality, like I don't think like if they do 250% over the next 5 years, let's do 250. So you're getting the not an insane evaluation.
Well, 250 would be here. What's half of 450?
225.
There you go. And 550, what is that? 300? No. 325?
Yep.
Yeah. 325. Yeah. I mean, you had Wall Street say, "Hey, NVIDIA should be worth 1,200."
Sorry, 275.
Oh, 275. Where? For what?
The right.
High right here? Oh, sorry. Yeah, okay.
Sorry,
375? 275. Yeah, guys, it's late. Yeah, I mean, look, okay, this feels a lot more like it, right? That feels a lot more like it. It's still stupid, right? It's still stupid, but it's a lot more like it. I don't know. We may have to come up with something that, like, okay, we've seen this. Let's cut it in half for all future companies, basically.
Yep.
Would they be able to do another 553% in the next 10 years? Probably not. It'll probably be a little bit less. Okay, so yeah, maybe that is the way that we have to tackle the 10-year. Again, this is what the third time. Yeah, the third time since we've done a 10-year analysis. So Not really certain, right? Not really certain. So yeah, or maybe we just go back to, or maybe I just bring this back to the year over year one, right? Instead of putting it flat for the whole entirety of 10 years, we just say, okay, every year for the next 10 years, it'll do X amount. You get me?
Yep.
So which one do you think would be better, though? I'm asking.
I'm not 1,000% sure.
Like, for example, if this wasn't, if we didn't divide by 10 on over here to get the numbers, what number would you put in here?
Oh, probably like 4.
4%.
No. If we didn't divide by 10, like it'd be a 4-year thing. So like
No. Not a 4-year thing. Not a 4-year thing. What percent in revenue growth would the company grow year over year if we didn't, like, yeah?
okay.
Because right now, this revenue growth assumption is being taken for the entirety of the 10 years, and then assuming that it's being split across evenly for the 10 years. So 225% divided by 10 would be 22.5% every year for the next 10 years. You get me? But would you do it a different way? Would you do it where it'll be 15%, for every year? Granted, 225% for the next 10 years divided by 10 is 22.5, which is fair. You get me? Which is a fair increase. So I'm just wondering which way would be better to do it. We can talk about this later, obviously.
We gotta debate it.
Yeah, we'll talk about this later. I'll change it up. It's not really that hard to change, but I think that 22.5% consecutively each year for the next 10 years is more reliable than 450, right? So yeah, with this we get what, 491 to 784. Wait, why is that going? That should not be. Oh wait, 375, Mike. 375. You said 275. Right?
Yeah, I said 275.
No, 375, Mike.
550 divided by 2.
What is that?
500 divided by 2 is 250. Divide by 50 is 25. That's 275.
Okay, so what was this middle one? 500?
Yeah.
Goodness gracious. What in the world is happening? Hang on a minute. Goodness gracious. Right. 275. Okay, that makes a lot more sense. I don't know why that wasn't working. All right, whatever. 491 to 784, and adjusting for debt, 983 to $1,571. Again, numbers look absurd, but at the same time, Wall Street just said that they want $1,200, which literally puts us right here.
This year.
Well, right. This year, right. They want $1,200 this year. This is looking at the 10-year perspective. If they gain 250% in the next 10 years, which would mean 25% each year, that is the price that Wall Street wants this year. Yeah. So, overvalued much? Yeah. I don't know, man. I just don't know. So, there you guys have it. Okay. Mike, I don't even want to bother taking a look at this dividend. Yep. Because putting in, guys, $6,215, you get $1.47 a year. That's it. So, let's take a look at the technicals, Mike, good sir. Yeah? Yep. All right. Let's take a look at the technicals. Let's see. And you are good to go.
Oh, sorry. So looking at this, the trend is your friend to the end. Apparently that holds true for NVIDIA and even afterwards, where it basically is like, what trend? I don't need a trend. I'm just going to keep going up. So we're going to have to see how the candle closes tomorrow. But again, you're right back above this trend line. Like, you broke it for a day, faked everyone out, and then you're right back at the 730. Probably gonna make a new all-time high. The question is it gonna go sideways at that time, or is it like similar to how we did like for an extended period of time here, kind of like sideways up, and digest the move and create a new base, which would be healthy for the company. But, or do we just get that euphoric buying going into earnings, like as we saw here, that started the year hit and NVIDIA just kept going and going and going like no tomorrow? Is the excitement going to wane or not based on the earnings price action? I would say not. If we go to the 15-minute number here, you can just see like fake outs to the bottom, knee jerk reaction, and then pile drive upward. So sitting at $735.80 as of right now. So we have to see where this lands us tomorrow, because yeah, this is going to be one hell of a runner, especially with NVIDIA. I don't think it's just like, oh, we're going to retrace all of it back. I'm like, to me, I think this thing, the euphoric buying is going to, the market's been looking for some excitement this week, and it just got it. So touching base on Apple, right? Like I said about this pattern, the head and shoulders, that's kind of super obvious right here. That essentially I'm like, I don't know if this can play out. And like, if Apple starts ripping up tomorrow, NVIDIA starts ripping up tomorrow, you could easily see a 2% day on NASDAQ, 1.25 on the S&P. Even if we get a retracement tonight, as we can see on the S&P, we can see we didn't even get to the bottom end of the wedge. The NASDAQ, we closed back above it, broke down 2 days in a row, closed back above it. That's all you need to know. NVIDIA is basically going to rip everyone's short face off tomorrow. Like, there's no question in my mind about it. Even if markets retrace tonight, it's going to be a green day tomorrow. That's what I'm thinking.
So let me actually, guys, backtrack a little bit on what I said when it comes to the discounted free cash flow a little bit here, because I caught my mistake. I caught my mistake. I said overvaluation much. No, sorry. Again, sorry. It's just I need to get my mind wrapped around the whole 10-year perspective. If you want to buy this company, right? If you want to buy this company, assuming that they grow at 250% and issue shares at 4%, if you want a 10% return in the next 10 years, you have to, this would actually be a pretty good buy right now, right? Not adjusting for debt, this would be $621, which puts us below the current share price. So this is actually saying that even if the current share price is looking like a buy from a 10-year perspective. Believe it or not, that's what that's saying. So sorry about that. That was my mistake. I got kind of riled up with the, with the numbers. But yeah, from a 10-year perspective, if honestly this is looking, assuming that they make 250% on the in the next 10 years, which they did 263 or 266% in 1 year. But if they do 250% in if they grow their revenue, I know they went 266% on the stock price, but if they grow their revenue at 250 in the next 10 years, in order to get that 10% return, you would have to buy the company at around 621 not adjusting for debt and 1,244 adjusting for debt, which would actually tells us that, yeah, at the current share price of 674, it's looking like a buy right now if you want to invest in the company for the next 10 years. So,
yep.
Yeah, there you guys have it. My bad. I got sidetracked when it came to that. Vinny, good
Hey,
sir. You're
shut
back.
up.
Vinny, good sir. What's up? Well, we just finished NVIDIA. And man, honestly, I think the big the big takeaway from this whole entire 2 hours and 9 minutes of live stream, you know what it is?
What?
I have to do more practice when it comes to the 10-year analysis because I have not done it a lot and it's a little bit overwhelming. It really is. I'm used to the 5 one, but not the 10 one. So yeah, because I think thinking about it, because I'm looking at the numbers, right? I'm looking at this 1,244, and I'm just like, oh my god, that's such a high amount. And then I have to remind myself, 10 years is a long time, right? 10 years, you go from being a 10-year-old to an adult, from 10 years old to 20 years old. Think about that scale and how much happens in that time frame. That I'm saying it'll go. That good price to buy this company today would be $1,200 or be $620, not adjusting for debt, to get 10% in the next 10 years. It does make sense though.
Yeah,
it does make sense. So, yeah. All right, guys. Yeah, that was 2 hours on NVIDIA. More than 2 hours on NVIDIA. Wow. So yeah, guys, we'll definitely have to do more. We'll definitely have to do more practice when it comes to the discounted free cash flow on the 10-year. That's definitely going to be one that, and that's mainly for me. I do want to take a look at Microsoft and see how they do in regards to that, right? And see what kind of numbers would make sense. You get me? And like how would the numbers essentially play out, right? Because it all depends as to what I do. So as to how the calculator is set up, right? You don't want to do it so that the number get fudged by mistake. So yeah. But aside from that, guys, that's today's earnings. That's it. I know we had a lot more earnings, but in reality, we really didn't. It was NVIDIA. So tomorrow, we're gonna do. It's gonna be mining day. All right. We're going to do a mining day company. We're going to do Vale and Newmont. So, yeah. We're going to be there, guys. Obviously, live streaming on Rumble, 7 p.m. Eastern Standard. And, yeah. And of course, we'll also take a look at NVIDIA, too. NVIDIA News to see how in the world that reacted. But, yeah. All right. Let's take a look at a few chats. So, we got Vinny. Hey, guys, still hold on my NVIDIA. Well, man, congratulations. You're probably up a lot more, right? Well, you'll be up a lot more tomorrow when the market opens. But congratulations, dude. Seriously, congratulations. So, Mike, Any last words before we end off?
No, I think I'm good.
All right. Well, thank you guys so much for watching. Really do appreciate it. Again, so terribly sorry that we're kind of just getting the hang on the 10-year scale, on the 10-year calculator. Honestly, we may just do both. We may just do the 5 and 10-year in the future just to compare. You got me? Just to have two perspectives. But yeah. I think that'll pretty much do it for this live stream, guys. Thank you so much for watching. Make sure to like, subscribe, comment, or make sure to like, follow, and comment. It really does help here on Rumble. We did get partnered, and we're going to be live streaming for the next 30 days. Oh, it's now less than 30 days. But we're going to be live streaming for the next 30 days here on Rumble exclusively. And yeah, thank you so much for watching. And thank you so much for everybody, the 20 plus people. I mean, at one point, I think we had like 38 or 36 people watching. Thank you guys so much. We really do appreciate it. Our goal is to become the #1 economics podcast channel on Rumble. That'd be great. And hopefully make this into a company one day. So yeah, with that said, guys, thank you so much. Be back tomorrow, 7 p.m. Eastern. With that said, peace out, and we'll see you all next time.